Hello, everyone. Just checking the sound. Give me a sound check here. We'll get just a few minute late start. No, actually, chocolate. Sorry you guys can hear that. I needed some fuel before we start this. Actually, it's actually chocolate. Okay, awesome. I'll turn it off so I can eat my chocolate in peace. And I'll be up in about 4 minutes, and we'll start gearing up for the show. Thanks, everybody, for showing up. Appreciate it. Okay, folks, listen to a couple tunes here. I'll be back in 3 minutes, ready to roll.
words, I fell in love with your soul. After hearing your voice, I fell in love with your heart. After seeing your face, I fell in love with your touch. After knowing your all, I'm in love with you now. We never met like lovers meet, but we connect, you and me, from the moment we kissed. And so it would be that after reading your words, I fell in love with your soul. After knowing your all, I'm in love with you. Now I am yours and always will be. Now you are mine for all eternity. After reading your words, I fell in love with your soul. After hearing your voice, I fell in love with your heart. After seeing your face, I fell in love with your touch. After knowing your all, I'm in love with you now. We never met like lovers meet, but we connect, you and me, from the moment we kissed. And so it would be that after reading your words, I fell in love with your soul. After knowing your all, I'm in love with you. Now I am yours and always will be. Now it only matters what you think of me. Now you are mine for all eternity. Now I'm feeling loved and happy just to be.
Okay, everyone. It's kind of dark. I can't get this camera to light up any better than it is, but just let me know you're hearing me okay, and I'm just going to keep going. Lot to talk about today. I saw that somebody was commenting about the all the uranium miners. I guess that's what we're going to need for the Biden war machine for all those nuclear weapons. Anyway, joke. It's a joke. YouTube, it's a joke. Okay. Anyway, it's Runa time, so we'll get all this stuff going. I'm not doing green screen, so it's actually my library behind me. It's a little quiet. Somebody says sound is low. It shouldn't be. Oh, you know what? Let me check one thing. Now it should be full on. So let me bring the microphone just a touch. Yeah, we had this issue last time. Bear with me 1 second. I know what it is. Let me know if the sound on this screen's any better. I think it's that screen I was on. The microphone's not set up there right, so hopefully it is set up right. Let me know if this is a better sound, okay? Okay, awesome. Yeah, it was just that setup I had on that other screen, so sorry about that. Anyway, so a lot to cover today. Markets are printed a new high yesterday, got a reversal. I'll go through all the details here in a few minutes. I want to keep throwing something out at you guys there, and I'll go through and I'll show you. If you have not signed up at kendallreport.com and opted in for our emails, you're going to want to do that. I'm going to make some big announcements right after the first of the year, and it's not going to be it's not secretive, but we are getting ready to do some other things that I want to talk to you about, and that's always going to be the best way to get the email out there. And So make sure you sign that up. I'll bring that screen up and where you can do that at, but it's kendallreport.com. And that it just brings up, you can fill it out if you want. That way we can communicate to you. There's a lot of things I'd like to communicate to folks, but you know, these public forums are what they are. You know, YouTube is monitoring their stuff. Not that I have anything to say. I don't actually even curse on my channel. You folks know that. So I do know how to. I can guarantee that, but I don't do those things. I keep it straight on the markets, and everything that's going on here is what's important. So a couple of things that just some cleanup stuff before we get going today pertaining to the channel, to the closeout of the year. I've actually have to be I'm going to be out of pocket completely after the 20th, so there will be a video on Sunday night that will be posted. I would do my best to set up the rest of the year from that point. That will be the final video for the year, and I think it's the week of the 4th. I think the 4th is the first full week again. I'll be back on Sunday the 3rd, I think it is, and we'll crank it up and start 2021, which is hard to believe. I always joke I'm still waiting for Y2K to hit, you know, since nothing happened then. Certainly 2020 was a year that plenty happened and continues to happen. And there's a couple things I've seen just on the chat so far that I will talk about. Somebody asked about why the airlines keep going up, and I'll just tell you that's why you want WaveTech. I put on a video the other night, the WaveTech Buffett strategy, which is basically the airlines, including Boeing in there, and that thing's just cranking big time. And sometimes a lot of things that you see in the markets are technically driven, sometimes they're fundamentally driven, sometimes it's a combination of both. I try to cover both sides of this stuff. I do something that those of you who've been hanging around the channel for a while maybe have figured out, and I certainly have said this on the live streams, is I do something that I call reverse fundamentals. So I'll look at the technicals. If my expectations for something to happen is looking down the road, and I try not to look down the road much more than 2-3 months, maybe 6 months. You know, I've talked to you folks about this. The longer term prediction that you make, the more likely you will be wrong. And you know, you can keep things very short term. The day-to-day noise is pretty tough when doing daily videos. That's pretty strenuous as well. But when we start to get into that 3 weeks, 6 month, all that stuff, that's where it starts to play out. And I get all of that insight through the WaveTech database, which I will bring up here shortly because I've been focusing on that. Yesterday's hit didn't do a lot. We're starting to fade a little bit. Futures down 475 here as we're talking. So we're seeing some fading. We actually traded, I think, R1 today. So we'll go through all the details. But that 20th video will be it. There will be no daily videos, but there will be content. My plan is there will be content that will be coming out on the channel. It just won't be daily commentary. There's a lot of, we are trying to harvest some videos that we've done in the past, live streams. Hopefully I'll come up with something significant today when I get on one of my classic rants, and that will be able to capture that and repost a lot of little clips and things, because I've got just lots and lots of hours of content that I've created, and some of it, when I go into some of the longer term viewpoints, stuff I said 2 months ago is still very valid. So we'll have some content on there. I'm hoping I've got a mock interview or interaction with Kathy Woods. It's going to be, I think the video is going to be called The Rebuilding of Kathy Woods. She's so transparent. You know, it's just so easy. That's who she is, and that's fine. And so she's given a lot of information, and we have rebuilt her strategies, and in some cases almost tripled the returns. So I'm anxious to show you that video. It's a 2-part video. I've already got 1 part done, And I'm going to go through and show you how we used our software, using multivariate trading, using our dynamic profit harvesting, all of those techniques that are available to you, by the way, that you can use. It used to be only available to institutions, and because of COVID, because of 2020, I met a lot of retail folks out there, and this has opened my eyes on how I can help you. You guys know it. I start my videos every night. This is, I want to help you manage your portfolios and protect your wealth. Well, that's what our strategies do, and that's what it's about, the software, the day-to-day commentary. We had a great Zoom meeting the other day on, I think it went for like 5 hours on Tuesday. We're going to repost some of that stuff as well. So just know that a lot of things are starting to. There's going to be a lot of things that are going to come from me, from the channel, and processes that I want you folks to have, and it's very empowering. All right, let's. Anyway, so. Yeah, I don't know. Somebody said, is Trump still getting in? There's 18 states with a lawsuit on there. This thing's going to get really messy. I mean, it's probably over, but who knows, right? In the world we live in today, I've said this before on the channel and to friends and everybody that hangs around me, is we live in a world right now that it's hard to determine what's real and what's not. And so there's just it's a very, very interesting point. So I am looking forward. I'm having a conversation tomorrow with Mr. Hugh Hendry, and I'm still trying to figure out some things that Hugh and I can do together, and may even involve me going and to visit him. So we'll see how it all plays out. But yeah, so the goals for today's show is to start to fill the gap. I want to start building. I have 2 live streams left before the end of the year, this one and next week. So once I get in off of all this stuff that we're doing right now and just chatting, once I get into the analysis, I'm going to be focusing in how the year end's going to set up. I'm going to start focusing everything in building this. So these videos, these live streams are going to be important to go back to and reference when the channel goes silent on the daily stuff. So it's something I do every year. So, and I've got a lot of family obligations that I have to, I need to satisfy here as we come into year end. So that's what it is. Okay, so it's time. Let's start digging into stuff. Fly Rod, you got to worry more about the Senate race in Georgia than anything. I agree. I agree. I can tell you something. I have friends that are in real estate, actually my brother, and there is a lot of movement right now. People are freaked out with Biden getting in, and if you own something and you want, and this is for anybody that's listening to this, if this might be you, okay, because I know people this affects, and they're going to change. If you're going to give away everything for free, you're going to have to get the money from somewhere, and most likely it'll be estate taxes, all kinds of stuff. You have 21 days to, if you have an inheritance, to get that before the inheritance taxes changes. You need to book it this year if you can. Otherwise, I don't know what's going to happen or how long they're going to do it. I don't think they'll be able to, go back to 2021. Who knows? They're going to need, this new administration that comes in, Biden gets in, they're going to need a lot of money from everywhere. And we're probably MMTing it as well, which is, modern monetary theory, where you borrow money, you don't worry about taxes. They may go that route. You think the deficit's high right now? You maybe have seen nothing yet. And maybe that's why we've seen some pricing in on treasuries and things of that sort. and why we're seeing that type of movement around from that standpoint. So we'll have to. Yeah, these are very unprecedented times. I told you folks last week when we did the live stream that we're living, I think, a historical pivot point. This 2020 thing, I think this. I even see. I really don't like Mark Cuban a lot. His arrogance. That guy's the luckiest guy on the planet. He sold a piece of shit property, made billions of dollars, and he's done some things since then. But he's like the guy that had the back in the old days, and you get the one hit. You get one hit on a music, you make a bunch of songs, you make a bunch of money off one song, and when you're 70, you're still playing the same song and touring doing that song. So that's how I feel about it. But I think I think we've got a lot of change. And listen, this is not political. I learned a long time ago. I've been around these markets. I've watched a lot of presidents come and go, right? From Reagan forward. Actually, I started when Jimmy Carter was still president. And just know that politics matter and taxes matter. And taxes are the biggest single impact on anything in investments. And everybody thinks, when you think of Ronald Reagan, for instance, he did lower the tax rates when he came in the office, and they changed a lot of stuff. But in 1986, there was a Tax Reform Act of 1986. If you were a real estate developer and a couple other areas in the economy, you got destroyed because of the decisions that Reagan made and that administration did on taxation on real estate and write-downs and depreciation. It was a disaster. And I know folks hate Trump, but Trump testified, I think around 1990 in front of Congress about this event, talking about how many people were destroyed. It destroyed thousands and thousands and thousands of businesses. And it was terrible. I actually worked for a firm that I was involved. We did a lot of real estate Reg D deals, which are security offerings to own properties. And boy, they got destroyed. To put that company out of business. I was the president of the broker-dealer, and I left. And this stuff hit the fan. I just resigned, went on, started my own firm, and that was that. And so, so taxes matter, and they will matter. And there's going to be a complete reconfiguration of just about everything. And so I guess I'm already getting on one of my little rants here. But it's important, I think, for you to understand this. No one knows the impact yet. I don't know the impact. No one does. This stuff is going to be a real time. It's going to unfold over as we see it, because right now everything's unknown. I'm not sure Biden even knows what state he's in right now. His foot's broken. He forgot about that. And, who knows what's going to happen with the administration in 5 months or 6 months or a year from now. But for sure, know that everything's going to change. The rules are going to change. Regulation, everything will change. And I'm not even saying I don't know that it's bad. Okay, I really don't know that. What I do know is it's going to change, and it's going to cause, from an analyst viewpoint, from my viewpoint, looking at what's going on, it's going to start to formulate once certain things come in, and start to make assumptions about these things and what they mean to the world, the economy, us individually, all of that stuff. That's stuff that you're going to have to just be, you got to be aware of. And like I said, taxes matter, politics matter, all this stuff matters. So and in the case of being an investor and doing the stuff, that the reason why we're on this channel, the reason for this is that we need to understand these things so we know how to position our money and what to do, and that's all that matters. For me, that's all that ever matters. I've really, I made a comment to somebody. I've always made more money in the when a Democrat was a president, with the exception of Reagan, almost everyone after that, Clinton wasn't very good, but Obama was awesome. For me personally, okay? The markets got destroyed. They did all the QE, all this stuff. I protected assets on billions of dollars that we were helping them, we were managing at the time. We literally saved a lot of money, and by being out, then when the market turned around, we made tons of money. 2009 in July we got in, and 9 to early 10 was just magical. Not anything like what we just went through. Okay, this year has tops everything I've ever lived through. But the point is that, you know, that's when those shifts happen, things happen, everything was good. And then it was the initial part of the Obama stage. And then after that, it just turned into a piece of junk. We had no growth. Everything was anemic, right? So there was no, I talk about this word, no VIG, no momentum. There was no momentum in anything for the most part. And so, you know, so we're going to enter into a new world. That's what I'm saying. And I think I brought up Cuban, and I did see him. You know, he's calling it America 2.0. It's World 2.0. Every rag, every website in the world is talking about the Great Reset, and that's exactly what's going on. They're resetting everything. They're going to reset all the metrics, and I don't know. You don't know, and they don't even know what the effects of this reset's going to be. There's a lot of perception. I actually think there's a lot of things that are going to be much better than they were before this whole thing happened. And, you know, so we'll see how it all plays out. So stay tuned. So let's go ahead and start. I want to go into talking about the S&P and go through the indices. I know I went through, you know, a lot, talking pretty much not a lot about material things, but we're going to dig in here, and I'll go off screen so we can start taking a look at some of these charts here, because these things are going to be I think in a very strange configuration as we're coming in. We're seeing the market starting to roll over a little bit. We're not really getting great momentum. This is the futures. And the futures are, if you look at the PPMs over here, I'm still looking for a way, and I'm hoping by the time we come in on first of next year that I found some new tools. I want to be able to zoom and mock these charts up better than what I can do right now. I don't have the greatest tool set, so I'm looking for that. So, yeah, so as we look at the E-minis here, you're seeing the PPMs just flat here. PM3 is trying to turn up a little bit, but this is sideways. There's no real downtrend. We did get a reversal yesterday. I'm going to try to bring this up where you can actually see. I'm going to bring my magnifier up and see if we can get in here. So you'll see, you have to look at on the right hand side where I have my cursor. So yesterday, and then look where it's blowing up on the screen. So we made a new high, reversed, we closed at the low end of the range, classic key reversal, just from a basic technical type situation. There's not a lot of what has to happen to confirm a key reversal is we have to close lower today. And I don't care if it's by one tick, but it has to close lower. And we look at market grid here, you'll see on the overnight, get on the right, we look at market grid. You can see the low was 36. So we traded on the futures between S2, R3, the high 73.25. We hit almost exactly R1. Last night's video I was talking about R1, S2, S3. So we basically have done everything. Now the question will be, as we come into the close today, we'll be hanging out the to the close is how if we do close lower, we're starting to get a little weakness here right now, down 8 handles. We're getting some selling right at this moment. But if we close lower on the session, that will confirm at least 2 more days. And sometimes there's a couple things that have happened. I'm going to go to the cash chart in a minute and just stay with the short term, and then we're going to start building out weekly and monthly, and we're going to stick with the S&P for the moment. NASDAQ lives in its own world, and we'll cover that as well. And we'll go. There's a lot that I can cover. I'm just going to rattle on. I'll keep a close eye. So while I'm talking about things, I'll glance over at the chat line here and just see if there's anything, anything out there that you folks are interested in as I go through this. Okay, so let's do that. Let's go over to the SPX, and you folks know that we did get this SPX sell on the 4th. So let's see, RTX is 36.94. We closed at 36.99. We should have got a couple days sideways. We got that. And then yesterday, on top of going sideways, the 3rd day, we actually looked like, okay, we made the low. We're going to trade up toward the upper end of the market grid. We did that. We actually traded all the way to, let me get the right number here. We traded up to 37.12. R2 was 37.14. Of course, we got a reversal, closed lower. We got some heavy selling to come in, and that was a significant event. So as what I'm unpacking here is that what we want to pay attention to is that the pattern that happens today, a confirmation lower sell will confirm the reversal. That tells us we get at least 2 more days. There's some criteria. I'm not going to go through the criteria right now. There's a video on the channel. You have to go back. It's probably in uploads. You'll have to expand that on the channel. But it was the video about selling Apple short. It was right. The date would be the day after the split on Apple. And that was a short sale. But the reason why I'm directing you to that video is that video has all the rules for this trade. So you get the outside reversal, what has to happen day 2, day 3, day 4. It's usually a 3 day, it's a total trade, usually 3 days and as many as 5. But there's criteria, and that video will walk you through. The force of that video was, yes, this is how to short Apple, which ended up to be a really good trade. But the point of it is that the rules for this reversal trade, and all you have to do is invert those rules for a buy-side reversal. So that's all you need to do. Go back to that video. You'll understand this trade, because I don't want to unpack the whole trade and the step-by-step criteria, but go watch that. It's not a very long video. It might be 10 minutes. And I actually have all the verbiage and step-by-step trade. So that's a really good trade if you want to know that. So so we're printing down here, looking at 763. Hang on one second. Yeah, we're down 7.63, 36.64. I mentioned also, I just want to stay on the short term for a minute. As I mentioned a couple days ago, that the 10-period moving average was going to be support. Well, we faded the PPMs, which I am really, believe it or not, it may not feel like it, but I'm really trying to get these proprietary indicators out on a platform that you can use. But anything when it drops under 0.15, which it did, then that average became very vulnerable to downside penetration, which we got, and now we're following through. And I mentioned in last night's video that it looks like just everything, maybe I haven't looked at the NASDAQ to see how it's trading right now. Let me reduce this so I can see that. Yeah, NASDAQ's still positive on the session, but the we should head on the S&P, on the Russell, on we should head toward the 21-day moving average. And that is currently 36.27 on the S&P. The momentum on that, this is that number. If you look over in the far left here on PPM2, that tracks the 21-period moving average. That is going to put you at 15.76. And if we close lower and probably just goes sideways tomorrow, if we just open flat tomorrow, this number is going to continue to decline. So the 21 could become vulnerable. This could be a classic. And I also referenced in last night's video a couple of data points that I think are interesting looking at. This one over here that I'm right now, which was the 9293, this was the outside, this was the STX sell signal that came in. That was right at the Tesla split. That was at the Apple split. That's when the market rolled over pretty hard. The 3-day trade, that was one of the better STX sells I've seen. But then we come in here and we go over to 1012. We had another one, and it was pretty drastic. We just missed one on this spike, but we did get that STX sell last, like I said, on 12.4. And so far, it wasn't as dramatic as the other two, as 9.2. There was another one back on 6.3 or 6.9. And so when these things happen, PPMs are losing momentum. Something I'll show you in a minute. We're going to go through the database, and the database also was at an extreme. And so we're seeing everything kind of printing up against that wall. I covered the database every night in the daily videos, and hopefully you folks are starting to get a feel for what this actually, how this thing works. And I wish I had options on my database, because I call this database so good it's scary, because I live and breathe this thing every day, and I have for over 20 years. And it drives a lot of my own personal sentiment, because it's interesting. I'll wait and talk to you about that when I bring it up. But I have the capability of watching 17,000 items, looking at it through my eyes, having a database spitting back at me exactly what my ideas, my trend following, my trigger points, all that stuff is feeding back to me. So I have a very high level of understanding what's going on with the database, and that feedback it gives me. I've developed a feel for that database, and we're actually working on a project that is going to give me the ability to data mine and actually work on signals potentially off the database and find correlations and all kinds of stuff. So, hang around, folks. It's gonna get better. Let's go to next level. Let's start looking at intermediate charts, and we're starting the momentum is still very robust from the standpoint of the PPM. So if we look at the PPMs here, PPM1, I don't know how big these are on your screen. I've got the screen full on, so hopefully you can see it. But over to the left, PPM1 is or on the right, you can see it both sides, 0.91, 0.62, and 0.55. And what these PPMs are, they are price pressure momentum, tells about the angle that or this underlying strength of the moving average itself. So there's 10, 21, 40 simple averages. I use simple averages because they identify the patterns that I understand, that I built. WaveTech is actually a concept, and that's the other thing I'm trying to get done. I'm trying to hire somebody right now to finish my book that I've been writing. I got 38,000 words and probably got another 20,000 to go to finish this, but I want this thing out there so that you folks can benefit from the understanding of this analysis and what it does, including getting the indicators out on the street and whether they end up going public domain or not. I haven't made those decisions just yet. But the bottom line is that what we're seeing on these things is that we're seeing them stall on a weekly basis, even though they're robust. What that tells us is that the 10-week moving average is still substantial support. It's way down at 35.03, and it is rising by the week right now, roughly from a point standpoint. It is rising about 30, 32 handles per week. So that number will move up to 3570 and then 3600. You get where it goes. So in 3 weeks' time, support's going to be somewhere between 3570 and 3600. So we're probably not going to trade much below that level at this time. So that's what the markets, there's going to be a convergence of price and this moving average. Anybody uses moving averages? I love moving averages, but having the ability which to place a probability on the validity of the moving average is something that I've used literally since 1984 when we developed this concept, and it is invaluable in making a decision whether you buy against that moving average or not, or if you're looking for it to break. So the entire process that we put together many, many years ago was just about that. It was about having the ability which to determine when a moving average was valid. Otherwise, when was it a trend line? You watch this channel, I hate trend lines. To me, trend lines are amateur because they're subjective. And not that you can't trade off of them, and maybe you've got some techniques, that's fine. I abandoned trend lines probably in 1982, maybe a long, long time ago. I found no value in them. I wanted to have market values that were not calculated or in my mind, but because I drew a line. I always talk about trend lines, and they tend to cause you to believe maybe false beliefs both on the top and bottom. They limit your thought process. So I like a blank chart, and if I do have any type of trend lines, they're moving averages, and the PPMs track the moving averages, which tell me what the probabilities are around them, and it works really well. And that's our models are based on that. Everything's based on some of those basic concepts, including pattern recognition and other things. But that's why these things are important. So that's why I can confidently tell you that somewhere between 3,600 and 3,570 is probably going to be the bottom end of whatever's happening here. So this little reversal that I talked about a fair amount, that reversal is going to set up. It's going to move us into that range where I'm talking about, down maybe to that 3,600. Maybe it never sees 35 anything. We'll have to see how the pattern sets up. And it was interesting for me to make the decision where I have to shut the channel down for the better part of 2 weeks to do live. It's very challenging to create these videos every night. It's a lot of work, a lot of dedication, a lot of discipline, and I preach that stuff all the time. So I'm good with it, but that's, like I said, this is my time of the year. But the bottom line is these markets are somewhat limited at this moment in time. So I'm setting up for you folks to how to look at the rest of the year. My guess is trying to look out 2-3 weeks is that this 10-week moving average is going to stay an important level, and possibly, I'm not sure what my capabilities. I know that I am going to be not 100% internet. This is going to be anxiety. I'm going to have serious detachment issues in a couple of weeks because I'm going to be I'm going to be on a piece of property that's not very close to anything that looks like internet. So we'll have some ability to get to it. So that's the good part. have some limited stuff, but not like having, you know, what I have here at my office and being able to broadcast and do all those things. But I'll find a way to communicate if anything is going. You know, I'll figure out how to get something up. You know, we've got Jay and other team members that can help out, so we'll figure it out. Yeah. So yeah, the futures S&P cash continuing to move down here. We've got down 10.06. So some selling. Right now, my expectation is that as we come we're into the last 2 hours of the day, that we're going to fade this thing into the close. And I'm not sure anybody wants to own this thing. And I just want to make a comment because I've been talking about the claims and the continuing claims on the video as well. So I'm going to throw some random content in here. In that those claims were much bigger than expected. And the continuing claims actually ticked up. I thought we had one more week of a downtick. I thought we could go to, it was 5.5 million last week. I thought we would get to about 5.2. I thought we'd get another downtick, and it upticked today. So that tells us that actually the shutdowns, all the stuff that's going on is definitely starting to affect at least the job market, which is super important. And that's been the one thing, all the metrics that we've been seeing around jobs and the economy coming back online have helped to keep the markets up, to do everything, keep market sentiment, at least as much as everybody's talking about everything's detached. It is to a large degree, but there's also elements in the economy that have done, as we know, really well. And we'll talk about that when we get into some of these other things. But from a weekly standpoint, that's what I see here. We can step it out one more notch here, and I will bring up the NASDAQ for a minute. We'll look at the spreads. A quick view of the NASDAQ Russell spread. That's something I've been talking a lot about. But this is for me really interesting, because we're starting to see some weird things happen on the secular charts or the monthly charts. So let me go off screen so you can see everything here. And what you're going to see here, this is the let me get the monthly up. Hang on. The thing that is concerning me at the moment is that we're starting to see PPM2 actually start to stall, and we're not really seeing that acceleration on PPM3. These numbers are way beyond us, but we're also most likely going to set up a dragon head up here on the monthly S&P. And I'll try to find a good dragon head that sets up. But what happens is we're going into this very broad volatility band that's going to happen, and it will happen right after the first of the year. I think it goes to my rant that I was talking about earlier about politics and taxes and all those things, that they matter. It actually takes me to the point where what we're talking about here is that there's going to be a lot of uncertainty. Nobody knows what the effects of new administration changing, how long it's going to take, what the effects will be. Nobody knows any of this. And anyone that sits there and tells you that they do, they're lying, because there's no way to tell. You're going to have to see what things are done first, and then start to, like I said, make assumptions about looking forward and probabilities and what those things are going to mean. So no one knows. You can go up and you can make a lot of guesses. I don't guess. I'm not a guesser. I'm going to always operate on data, what I can see. So the data is telling me is we're entering into a very broad band of volatility. This, those of you who watch the channel, you know I talked about this happening on. This happened in Tesla. It's happened in it doesn't matter what the symbol is that's attached to the chart. When these formations happen, the configurations that follow are very consistent. highly consistent, in an 80 plus percentile range as far as the philosophy around the pattern. As far as the random movements, then we go to weekly and daily charts to try to figure out what type of movements we're going to get within this. But what this broad range that I'm talking about here is, I'll put it up on screen so you can see it. The range for this month has been very, very narrow so far, but you're looking at the top end is as high as 39.75 on the S&P. This is SPX, and as low as 32.68. That's what these dots represent in this band over here. And so there's a broad range. Typically what you're going to do on a monthly, if we look at last month, for instance, the high was 36.45. It went above, we actually got an RXT sell on a monthly basis. So that tells us also that we're going to see this sideways range. Now the fact is, even though we got the RXT sell, a lot of times we'll print an R1, R2, and then we'll come back into the range. So let's unpack this, because this is what I'm talking about happening going forward. Chances are the market grid's going to, what I call it squares off. It builds a box around volatility. As these market grid numbers are based on volatility, they're not on standard deviations like Bollinger Bands. They're based on a volatility calculation, and the dots and the numbers that you see are based on Fibonacci relationships. And so there's a look back period, and then there's a calculation that comes up, and these numbers are guidelines for expectations. And then when you go on a monthly graph like I'm doing right now, there's a little bit of detachment from how close these numbers are, but I've seen monthly numbers just come out incredibly close. But the range is very broad, and that's why I'm saying you get a very broad range. What will set the tone for the bottom end's fairly easy in this configuration, because you have some moving averages. You can see PPM1 is spiking up at 2.24, so very powerful underlying trends longer term still in the S&P. But that doesn't mean we can't go sideways for as many as 4 months or more, and this momentum can stay intact. These are secular charts. These bars take literally years to unfold, and so what we're looking at is at least a 3-month, a possibility of a 6-month configuration that is going to set up here, and it could be a while. Going back to my earlier rant on when we find out what new taxes, what things are going to happen, everything that's going on, we're not going to know that for a while, and it's probably going to be 3 or 6 months, and that's how that's going to be. And this is telling us that's what we're going to be dealing with. The good news from this is it's going to be some great trading in here, and being able to scalp off these numbers, and these numbers they're big numbers. So let's just talk a little bit about the specific numbers themselves. So right now we've had 37.12 has been the high. R1 on a monthly was 37.05, so we exceeded that. If I went back to the daily and weekly numbers, you'll see 37.12 was the number. 37.21 is another number that's showing up. So we start to be able to fine-tune the expectations within the pattern. So these set up opportunities for maybe doing SPY, straddles, all kinds of different strategies on options, trading strategies. Those type of things are going to be in vogue for, in my opinion, for at least 3 months. And it's just a matter of putting these things in as close to these extremes as you can. It was pretty simple in the last 2 sessions actually to put some shorts out there when we were printing R2. I think it was 3708, 3708, 370750. I put those out there, triple shorts. You got to put those out there when that happens, and especially when you're up against some of these numbers. And if you have the market grid, if you're a subscriber of ours, you have the market grid that I call it the matrix. So you have the daily, weekly, and monthly configuration out there, and that's how these numbers start to line up. All of a sudden, you start to see 37, 21, 12s. You see them on the daily. You look at the monthly. You see the 3705. You know there's a serious number here at 3705. 3798 is a really big number to expect for this month, especially coming into holidays, and especially since we are not quite halfway done, but we will be as we come into early next week. We'll be halfway done, and I'm telling you, this seasonal tendency, the reason why that the reason why I take off the last 2 weeks of the year, because usually nothing happens, right? This year may be different, but we'll see. I think there's going to be a lot of unwinding that happens on these markets. But this monthly expectation, this is important to understand, especially since I'm going to be, like I said, my goal here is to set you up for understanding what's likely to happen in the next couple of weeks, and at least have some parameters. So these numbers that I'm putting up here, you're getting the market grid numbers. I just put them all on the screen here, daily, weekly, monthly. I just displayed all those to you. So you should write those down when we rebroadcast this. After we finish the broadcast today, and we'll mark where I talked about the S&P, and I know Jay's listening, so if you could mark talking about monthly numbers probably in around 10 minutes ago, just make sure we have that timestamp. So we always timestamp these things so you can find things that we talk about, individual stocks, all that stuff. But yeah, so this is important. And this setup, I'm going to show you now. We're going to stay on the secular charts. I'm going to switch over to all of the markets. We're going to go NASDAQ. We'll look at the Russell. You're going to see this setup is coming through on all of the indices. And after a year, I mentioned, I think on a video a couple of nights ago, back in April, I told you we'd be making new highs and that the NASDAQ was going to be up 40% and the S&P up 14%. You would have thought it was crazy. Matter of fact, in June, I remember I did a video. I got the trolls came out in numbers. Was talking about the market going to all-time new highs. I was getting Fibonacci projections that were printing up to where we're at right now in this 37 handle, and it seemed absolutely ridiculous to even put it out there. But I'm going to put what I see out there because my work. This isn't my first rodeo. I'm going to always put out what I see, and then when I put those type of things out, before you start trolling me, well, where is it? Just watch it go forward. And those of you know, I had a nickname on the trading floor. They called me Dr. Given because I used to say it's a given, it's going there, and then people would tie me down. Well, when smartasses at going there, and they'd force me into a time period, and the timing is not as important as it is if you're doing options or something, but the target points, they just take what time they take, and you have to walk them forward. And that's my goal on doing daily videos. I walk forward all my ideas, and they do switch from day to day because markets change. We get an RXT sell, and I saw a funny thing on my Twitter feed last night. Somebody made a comment that the bears got so carried away that they triggered a STX buy, and I mentioned that in the video last night. I don't think the STX buy was going to hold very good. It did manage to give a little bump. If you were looking to sell, we traded 36.78 today on the cash, and now we're trading down a little bit. We're at 36.61. The low's 45, so we'll see how this thing plays out. But I just want to spend a lot of time on these markets here, and I'm still going to cover. I'm going to go through gold. We're going to go through some interest rate stuff, and I'm just going to keep going. And I'll get to the point where we'll do some Q&A. Maybe we'll do a Q&A on something that I've talked about so far to this point, and then we'll do some individual stocks at some point as well. So let's do what I said. Let's go to NASDAQ. You'll see NASDAQ is setting up this big box as well up at the top here. That is definitely That is definitely the same pattern. It's interesting, the secular charts or the long-term monthlies on the S&P have a stronger profile than they do on the NASDAQ, but on a shorter term, on a weekly and intermediate, the NASDAQ has a better profile. So it's somewhat interesting. So let's go over and let's put the Russell up here. You see same big box. So we're going to go into this giant consolidation. It's going to make us all crazy, and we're right when it looks like it's going to the moon, you're going to be able to sell it, and when it looks like it's going to zero, you're going to be able to buy it. So it's going to be a massive trading range. So all of these things are things that I know I'll be covering as we go before. No, WaveTech did not say 3650 was the absolute top. I'm not sure where that came from. So, but no, so what it's saying here is these, as I mentioned, these market grid numbers, these are numbers to trade around. If you look at the Russell, I'm going to go back and forth here. Going back to look at the PPM here. I'm going to go to, say, I wish I just had a better tool to draw at, but I'm going to draw this in because this is important. So here is the top of on PPM1. This is the current value. It is not higher than that value here. Same thing here. Basically have divergences setting up on all three PPMs on the NASDAQ, and this is monthly, so long term. If we go look at the Russell, look at the difference here. So on the Russell, it's just skyrocketing here, right? Just straight up. There's no divergences. Here's the high here. No divergences at all on the Russell. But even in spite of that, we're still getting this pattern that's setting up that we're going to be locked into some big, wide, sideways pattern where the market just going back and forth here. It's just going to be a huge consolidation. Like I said, it's going to be great because we're going to be able to trade this thing, and there's going to be a lot of money. And I'm going to do this. As soon as I do this, I'm going to bring up WaveTech and look at the database here in just a minute, and we'll do that next. I want to go and I'm going to show you the S&P before we move on from this. So if we go to the S&P, we go to SPX and go monthly. We do have a divergence on PPM2. We do have a divergence PPM3. PPM1 is confirming, but like I said, it's easy to figure out the bottom in the range. The 10-month moving average is 32.32. We're not going to get anywhere close to that. That weekly averages that I showed you a few minutes ago will be where we end up at. So that's definitely where the boundaries are going to be. But all of these charts, we're looking at least 3 months, maybe longer, locked in these ranges. I don't think we're just going to go ballistic and go straight through. Now, this is a very powerful looking PPM on the PPM1. But my guess is we come in so far this month compared to the last 3 months, the volatility has been nothing. So it's actually December, from my viewpoint, is living up to be exactly what it usually is a much lower volatility, squaring of books, a lot of noise in the market, and typically we don't get a lot of big movement here. January is going to be a different story. But in this case, January is going to bring in, who knows what January is going to bring in. Okay? Who knows what some folks will argue there's no election uncertainty. Well, there is actually. There's 18 states, the last I heard, in a lawsuit, and it looks like this one's going to get heard by the Supreme Court. And so, yeah, there is going on. Whether it changes or not, I have no idea. I'm not saying it's going to change. So, no, I did not do gold yet. So, yeah, so let's do one more thing here, because I think this will be helpful. I just want to talk about the VPM database. So I'm going to bring that on the screen. Here's a WaveTech, and we're going to go into a couple things here. And on the All Stats page, I want to bring up an area here that is important. So this is what I was talking about. Right now, the weekly intermediate models are actually at 72.35%. This is about as high as this database gets in normal times. And what will be interesting as we come into Friday, depending on how this market closes, it will trigger more sells, potential sells, and maybe flatten out. I mentioned this in last night's video that I expect the database to flatten out, meaning that last week we had 1,000 new buys versus 120, 130 sell signals. That's what these numbers are right here. And we have two basic models that we run on the database. And so the other thing that we look at is over on the right-hand side where it says positions overview, and we can see what the average long days are on the optimized models, which means the best. We actually have each model, each of the two models are optimized to the best returns for any symbol in our database, which are 16,430 of them. So we're looking at that right now. Current durations pushing 17. We're just about halfway through the duration, but last night, if you notice, we started to see some sells. We got almost 1,000 sells versus a couple hundred buys right here on these models right here. I'll highlight that right there. And that, so we saw some negative rotation. We'll see if that follows through. My expectation is that it will follow through, especially if we close slightly lower today. And this could be a big number. We could see a couple thousand sells come in. I looked at a bunch of charts, went and reviewed a bunch of stuff, and it looks like there's a hair trigger on a bunch of these trades. So the trends, that a lot of the trends on these secondary and third level stocks have not developed enough, and it's very possible the database is just going to puke these things out. And that will start to bring this down. My expectation is that this, if we go over to the daily searches here and go to the daily model, and I just want to bring the all stats on that, is the dailies are 75% long. They got up to 80%, so they're only 5% off their top. But the important part of this is that what my expectation is that this is going to drop from 75 down to about 62, maybe 58. And this happened going back into September. We printed 90% long, and it was very overdone. And what we saw then was we went from 90% down to 6%. That was a disastrous sell-off. I'm not expecting that, but what we're going to see, pretty sure we should get further insights into this in tonight's video. And as we come into next week, we start to see this database pull back a little bit. And then when that happens, it'll take several weeks. But it's also, this is my forward-looking thoughts on this. It's also confirming everything I've told you so far, that we're going to go into a 3-month, very broad range, trading range with absolute uncertainty, not because of who's the president, but what whoever's in there is going to do. There's going to be a lot of uncertainty from that standpoint, and depending on what kind of things happen out of COVID, shutdowns. We've got a lot of headwinds ahead of us, it would appear. And I know that they haven't met much. And while I'm in here, I'm also going to address early on when I started the stream today, there were somebody was asking why the airlines keep going up. We'll look at my Buffett strategy, which was taking the other side of Warren Buffett's selling back in May of the airline. So we'll take a look at that in a minute. But this database is an absolute, keep watching this channel, because what happens, you'll see the insight that it actually brings to you. And I know on our WaveTech training meeting that we had on Tuesday, there was a lot of folks talking about that have used the product for 3 or 4 months, maybe 5 months now, that they've been able to get some insights into that. Jonathan, I love the sun stuff. I've had so much fun with that stuff over the last 40 years. Hey, Richard, thanks for dropping in. Yeah, so let's look at that Buffett strategy. As a matter of fact, all of these strategies are strategies we built on training sessions. We're not doing them on YouTube at the moment, but we are looking to rebroadcast some of the stuff that we're doing. There's a lot of, we're helping folks to run their 401k money. There's a lot of serious conversations, and we just felt that we didn't want to be broadcasting that in the public. There's way too many in-depth discussions starting to flow out of some of those, and it's been good for the user base. So if you are a user of the software, please show up at the Zooms. We've been sending out the videos. This one the other day was a little long. It was like 5 hours, so I'm not sure how you're going to find anything in there. So we're going to figure some things out there. But let's look at Buffett. Buffett strategy since May up 112%. This is the equity curve right here. Let me bring this up so you can see it. This is the equity curve. We started this thing back right in May. We started buying some of the stocks. They had a little downside, and then this thing just went vertical. And then we got out of this stuff in around the 6, 9, around that level, around June 9th, we got a lot. We sold out of them. We tried buying them. We got out of them again, and then we bought them recently. I'll show you where we bought these things. And and when we go through some individual stocks, if you're out there, if you make sure you query me on which stocks you'd like me to cover. But yeah, so you can see what's interesting. The current drawdown actually says duration, it's new high. So this portfolio is putting up a new high. So since we bought back in November, it was up 14% in November, up 7% right now. And this doesn't have real quotes here, but if we look at the open positions on this particular portfolio, you're going to see on 11/10 on November 10th, we bought American. Most of them got bought on 11/10, 11/6 on Boeing. Boeing's up 48%. It's given back a little bit. It was up about 56% the other day. You can see all of these other stocks were bought on November 10th. So we've been long for a month. And so some of these are starting to show some pretty good moves here. Boeing's been the biggest, but you look at American Airlines up 33, and evidently they're up again today. So these are all really valid positions. And one of the comments that came out of the meeting that we did on Zoom on Tuesday was that one of the gentlemen there said something that they stopped day trading and trading futures, and they're making so much money running these portfolios they don't even care about all that stuff anymore. Yeah, Murphy family. Yeah, please send us an email. You should get a email from us every week with the links. So make sure you send an email to info@Kendall Report, or you can, if you're in WaveTech, you can go right here and you can do you can send a feedback. I'll show it on the screen here. You can put in here comment and just tell us what you need. This is right here for you to be able to comment directly to us. Okay, so just go ahead and do that. So, okay, so, yeah, so, yeah, it's going to be interesting. Just back on the Buffett, somebody said sold too early. That's the beauty of having these models, is getting the emotion out of there. It's really, really simple to pull the trigger, and these things do really well. So, yeah. We also have our Portfolio Expert, our next level software available now as well. So you can actually go to this website to find out more if you're interested. You can go here. This is there. You can go and, yeah, one of the things that we have here, there's something else. I'll do a quick basic sales pitch here from that. But if you go to our WaveTech research tool, not only do you have all the models, we also have all this. We developed we had a CFA that worked for us for years. We developed a whole lot of screens. So what I'm bringing up right now, you can actually, it takes a second. It's a very large spreadsheet, but we do stock screens. We have all kinds of abilities for you to generate ideas, to build portfolios. These are for our institutional clients, but also you can do them there under the support. You can actually go and you can go to this website and you can see a lot of this stuff is there in the front end. These are all the screens that we have. We have style boxes, all kinds of stuff. This is institutional grade stuff that we're putting out there. It tells you a bit about screening ideas and definitions. There's a whole bunch of stuff, and there are videos as well that you can watch. You don't even have to subscribe. You want to find out, you can go into the WaveTech training, or you can go into Portfolio Expert University. There's a lot of good stuff there. WaveTech and Portfolio Expert have a lot of similars. There's a lot of things that Portfolio Expert can do that you can't do in WaveTech. So it is the next level. But all of these videos, research, there's a lot of detail, and even like things that I talked about on the web, on the live stream today, breaking down how these models and everything works. So portfolioexpert.com. And let me show you one more thing while we're doing this. If you want to opt in for our information, just go to kendallreport.com. Give us your email address, and we'd like to know what platform you trade on, and comments, suggestions, anything. But you definitely want to sign up for this. We've got some really cool stuff that's going to happen right after the first of the year. Been busting tail. I saw somebody always comment about, do I sleep? I do sleep. Sometimes I shift sleep depending on what's going on, meaning that I usually will get what I call a night's sleep. But anyway, but that's yeah. So Murphy family, yeah, yeah. One of the things that we are looking into, actually, the problem that we have with doing international stocks, we actually have access to them through our data vendor, but our platform is going to think everything's priced in dollars, or everything's priced in the same currency. We can't specify individual currency. So it will work if we do get the Canadian stocks on there. It will work only if you put Canadian stocks in a portfolio, right? So that everything that's in that portfolio is being calculated is in Canadian dollars. If you mix any U.S. stocks in there, it's going to throw the values. It's not going to work with the currency exchange and all that kind of stuff. So that's something we've been talking about for years, and building an international platform that you can decide what currency you want to see your returns in and all that. And I believe that will happen, not real far away. So I think that will happen. But go here, sign up for this. Okay, there's no obligation. There's nothing. It's just email. You can opt out if you don't. We don't send out a lot of emails on this list, by the way. We've got quite a few emails that people have opted in, and after the first of the year, we are going to be announcing some things, and this is the place where that's going to happen. So make sure you go ahead and sign into that. And so I've done my duty. I've done the corporate duty. So back to the markets here. So let's. So I've set this up just to kind of go back and, portfolio, David W., it is good. It's only U.S. stocks, so that's all we have in there right now. And like I said, we're working on a lot of stuff. And I don't want to make an official announcement, but I will tease you guys. It looks like we're working on getting the market grid in Portfolio Expert on every symbol in the database. It's pretty exciting. So that could happen. We'll see. It's probably 30, 60 days max out, but we started working on the project the other day. So pretty exciting on that. Don't have any stocks but U.S. on the platform right now. Like I said, the biggest issue has been the multi-currencies. Thanks, Jay. So that is the biggest thing right now. We have found, it's interesting, we have a fair amount of international clients. So, I would say people are using Expert to trade U.S. and other things. So it would only be right, since I'm so deep into this this thing here. When we do some individual stocks, I will bring up Expert just so we can talk about it. So what's happened since we were gone? S&P down 935, so still negative. Like I said, I'm looking for a negative close today. We get that. We get a confirmation of the downward reversal from yesterday. We get a couple more days. We sell off into Friday. Possibly carry that thing into Monday, Tuesday. We'll see. We're living on day-to-day news and vaccine news and what have you. I'm not sure anyone even cares about vaccines anymore. I'm not sure what anyone cares about. So, all right, let's go on. Let's do two things. I'm gonna flash into the 10-year we're gonna stick with the long-term charts here. I believe that we are going on the 10-year notes. We will see 110 to 120. So 1.2% is probably top end. Maybe a little higher, but longer term, if I look at these PPMs here on a secular basis, this thing is making a giant turn. Chances are the highest it will get is maybe 1.5%, but that's a huge number. And it would, it's going to be interesting, because this may be some insight into these things I talked about: new administration, taxation, spending. I mentioned earlier, if you're in the U.S. and you have inheritance that you can do this year in the next couple of weeks, you want to do it. Trust me, they're going to change all the estate taxes. Everything's going to change substantially. So if there's any transfers, talk to your attorneys, talk to your folks, your financial advisor, and figure it out now, like today. Get off this podcast and go take care of this. It's very, very important, and may be the cheapest time to transfer wealth that you're going to have, maybe from this point forward in the United States of America. So be aware. But talk to your tax people and find out. But how's the best way to put it? Yeah, I see Jay's putting the price out there. That's by quarter, so that's not exactly right. It is a month, but we charge by the quarter. I think it's $8.91 by quarter for expert. So, yeah, Richard, love to have you on board, man. But anyway, this pattern that we're seeing on the 10-year on the long term, this is most likely the bottom in yield. You've heard me tell you, for anybody that's watched this channel this year, I told you that we would not see an inverted yield curve. And here's the yield curve right here, just to make that clear. The big one is the shorter end here. This is the 510 spread. If I put the 530 up, this thing's through the roof. But these are the 510s. 510s, 1030s, all of these are going to keep a steepening pattern. This, where I'm putting my cursor down here, that spike low on the bottom of the chart here, that's where the Fed came in on March 9th and said, we're basically buying everything. We're going to support the markets. We're QE unlimited. This was what happened that day. And immediately this thing spiked. It came in, and then we trended. It took us months to get over that 2-week spike. You can see here, this was on 3/19, so 10 days after that Sunday that they announced all that. This chart came back in and had just been grinding. You know, it wasn't until way over here in November before we saw this spread steepen beyond the spike. But this trend is likely to continue. This has everything to do with how the Fed is structuring the economy right now and how they want the financial spreads to be, because this gives a little bit of an edge for lending money and doing some things. And it was interesting because they were authorized $400 billion or something, and they only used $100 million. And it's interesting because they only had to tell you, the market participant, the institutions, that they were going to backstop the market, and the markets took care of themselves. And that's what they always count on. They very seldom use all the money, but they will show up if certain things happen. So, I'm not sure why that happens, but I see some talk about the res. Make sure you set it to 1080. I have no idea why YouTube does that. So anyway, enough about that. Let's move on. Let's take a look at, we'll go to gold first. We're going to keep going here. I'm going to start long term, and there's actually an interesting pattern here, and I'm just going to stretch this over here. One of the things, we got an RXT sell on a monthly on gold right here, and we did spike the following month. We did manage to close lower the next month. Usually it's a 2 or 3 month signal, 2 or 3 bar signal. It doesn't matter whether it's monthly, daily, a 1 minute, 5 minute, any of those charts. This is the signal. And one of the things that happened here, which is interesting, for a minute, we spiked below the upward sloping 10-period moving average at 1.18. Let me see what the average was then. It was at 0.75, but it rebounded this month. It rebounded right back to the 10-month moving average, We're trading right on that average right now. Let me bring that on screen so you can see this. Is the 10-month is 1837. We're trading 1838. It's like a magnet with that. And what we're likely to see here, we set up this pattern, and we could see, depending on the close for this month, a couple weeks from now, we could see this grid start to turn back up again. I've been talking about on gold. I'm going to go very quickly through gold. I want to go to the weekly. I'm going to go top down. So weekly chart, I believe, is starting to set up a bottom. We got a reversal last week off a key level down at the 1766 was the number I had out there. 1767 was the low. You'll see on this grid, S1 was 1766. It's right where we reversed last week. We did manage to close back up at 1840, so it was a pretty big reversal. This week, we traded up to the 10-week moving average, basically at 1883, but the high was 1879, so we basically put it up there. On the daily chart, we hit the 40-day moving average, which was the exact hit that I talked about in the daily videos the other day. So what we're saying here is that market is probably going to stay locked between this 40 and 10-week moving average. It could trade down into the grid, down as low as 1821, 1800. I think the 1866 number is going to be the bottom, but it's going to take a number of months for this to go. Now, probably one of the interesting stories that I saw on the internet this morning, I think it was a CNBC story early this morning, that JP Morgan is now saying that gold's going to be under pressure for years because of Bitcoin. And I thought that was really interesting because they were telling us just a couple years ago that Bitcoin was a joke. Now they're telling us it's going to take over gold. And I don't have an argument with it, but it's just kind of interesting how most of these folks are, I don't know what to say about it, but I thought it was an interesting read. I don't know if you can find the article. I'm not sure it's even worth reading. I was being a typical internet guy, and I read the headline, read the first couple lines, and go, that's okay. But anyway, this gold chart is setting up a bottom here, but we're a long ways from forming a new uptrend. So a bottom and an uptrend is two different things. So we can set up a bottom, we could end up consolidating for months. In fact, you could look back, let me get this off the screen here. You go back to in 19, this is a month, this is a weekly graph. We spent weeks and weeks in a very tight sideways range before we started to see this thing rally up. So this is definitely going to take a while to formulate. The PPMs are telling you they're negative. There's not a lot of structure here to be talking about buying gold. I don't see the opportunity. It looked like there's going to be a big opportunity, but long-term hold, you're guessing. I think there's going to be a better timing entry for gold than just holding it through this mess. Because I think it's just like with all these markets, it's going to be locked in this market grid on these monthlies. Weekly and monthly charts are going to be really defining these very broad trading ranges. So my expectation as we come into 21 is that we're going to see almost everything go into a broad sideways range. Most likely will continue to be a slight upward bias on the equity markets. Will they accelerate and blow up and go vertical? I don't believe so. I think they'll stay in that grid. But as I mentioned, in the S&P grid, if you were watching during that time, as we actually were looking at, maybe the market grid suggested we could go as high as 3,900 on the S&P. So, I mean, there's big, broad range. So there could still be new highs. We printed 3712 so far. We could definitely go up there, high 3,700, maybe 38. And like I said, I think this year, characteristics of December, we're just going to see all these markets go almost dormant. And the only thing that's going to matter is anything that folks want to do right now. There may be a bigger tax trade than there have been in past years, meaning people that are going to adjust their risk accordingly might do so right now, just not knowing what capital gains chances are. I guess if you had a lot of capital gains, that would be another thing to consider. Talk to your financial advisor, talk to your accountant, and consider taking long-term capital gains now, because they're going to change all the rates, everything. They're going to jack everything. You know, there's no doubt. They've made that clear. So it fascinates me that America wants higher rates, higher tax rates, and want to just, yeah. Anyway, I'm baffled by the world we live in, but just know that that is one of the things. So those are, we'll have to see if there anything like that comes into play where people are thinking like what I'm suggesting, that hey, I might as well take these gains now than to wait later and pay more. So there could be a tax benefit of selling. So it's going to be interesting as we come into year end. A couple things, like I told you folks, a lot of times when I'm doing these live casts here, it gives me opportunity to actually, you know, think things through real time as I'm explaining them. You know, what is it they say when you're teaching or explaining, you're also learning. And you know, sometimes I get these great thoughts in figuring out what's next by doing these things. So I enjoy doing these podcasts like this. Let's go, and so there's not really anything on the daily gold. We'll bring it up, but I think what I'm going to do after this, we did interest rates. Let's look at the dollar as it's sinking into going into a deep dive. I had talked for months that I thought the dollar was bottoming over here. I thought we would get up to the 200-week moving average. Never came close to it. Dollar's going lower. It's pretty obvious that, once again, this is that shift. The new administration, they may want to discount the dollar. The dollar could go, you know, well below 90.20 is a big number for me. And below 90.20, then you get into some serious potential depreciation of the dollar. And this also, I think, is reflecting what you're seeing in the treasuries. And that is that the liquidation in the treasuries, there's a lot of foreign holdings in treasuries that the dollar is weakening as they're selling treasuries. So treasury yields on balance are rising. U.S. dollar is declining, and there'll be an equilibrium that will be met at some point. And if you listen to Ray Dalio, he's going to tell you how the yuan is going to be the new world currency, and God help us if that were to happen. I agree with you, Ed Stevens. And Nick, you're also right. There may not be long-term gains in a lot of that stuff, but there are plenty of folks out there, and that's why I'm just telling you folks. I don't want to. I don't want to get too deep in this because I can't claim any expertise other than I have an opinion about it, and I'll keep saying it. Talk to your tax people. We actually have on the WaveTech meetings, one of our goals is to help you guys manage your retirement funds and stuff. And we do have professional tax consultant and other folks that come onto those meetings that are in a position to maybe say things. You still have to be careful without knowing any of your individual situations. But having said all that, is make sure you research these things. If maybe, you know, the short-term gains, everything, you know, all gains are going to be taxed differently potentially. I'm trying to be nice, but I'm not potentially. They will be. So if tax rates go up in general, maybe even the short-term gains are worth taking. That's I don't know the answers to those situations, but it's something that you have to consider. And I know I can just tell you we have some connections with large family office operations, and I can tell you these things I'm telling you are what they're talking about right now. I had a long conversation the other day about very wealthy families moving properties and money, and all this stuff is going on right now. People incredibly busy. It's bah humbug on Christmas. It's a deadline that a lot of folks feel very strongly about, and there's a lot of signatures on deeds and things going on that are happening because of the changes that are about to occur. So I'm just saying it. Okay, so find out if you have that situation. All right. Yeah, attorneys suck, but you need them. I agree. I agree. All right. So U.S. dollar, we got done that. Yeah, I think we're at a point. Where are we at in time? Okay. Yeah, so we're getting it at a good time. I think maybe I'll bring up Bitcoin because that's been a big deal. I'll bring up Bitcoin, and then shortly after that, we'll start to talk about maybe some individual stocks, start to do that stuff for the balance of this final hour as we come in. Markets are continuing to stay somewhat under pressure. We'll see if there's anybody interested in buying. The S&P down 832. We got Dow Jones down 85, and of course the composite is up. One of the things, one comment I'll make is on the AirBNB offering that came out today. And these are rough numbers. There's just off the top of my head. I read the article about the IPO. These guys made like $281 million. They did $1.2 billion in revenues, and they priced this stock at $47 billion. I mean, ponder that for a few minutes. So we're looking at, on gross earnings, we're looking at, 40 times gross earnings, almost 38, something like that. This is crazy. That's the type of pricing that's happening in the markets right now. This is for a company that managed to generate, I don't know what it is, maybe 14, 16% bottom line revenues off of their and they get 40 times earnings pop. So interesting. All right. Let's do this. I'm going to go off screen here, and I'm going to ask you folks. I already have Apple and Tesla on there, so don't put that out there. But let's put out some stocks that I'll go through. Let's hear about these uranium stocks. Yeah, give me very specific time stuff, okay? Yeah, make sure, I can get some ADRs, but make sure these things are, for the most part, U.S. All right. All right, I got quite a few. This will keep me busy for a few minutes. I see somebody commenting on the sound, right? It's okay out there, right? Okay. I am going to do Bitcoin just to start because I said I was going to do that earlier. Matter of fact, this is one of those patterns that I talked about a little bit ago on that's going to happen in the S&P and the NASDAQ. All the equity indexes are going to end up in this pattern. This is the beginning of a potential dragon head, which is a consolidation pattern. And this one, we're looking here, we're starting to see PPMs are bleeding off some of their strong upward momentum. The next move on Bitcoin is probably going to be when the 10-period moving average rises in this pattern, but we're going to be somewhat limited. I'm going to bring up the market grid here on a weekly. This is this week's market grid, but it's going to be similar next week because this thing's going, because of volatility, it's going to stay similar over the next week. And what we're seeing here is that range 21,899 and downside 16,676. So that is the pattern that we're likely to stay in, and we're going to chop around here. Momentum's going to bleed off. Possibly, if we go down and look at a daily graph here, yeah, you can see this is more or less like the dragon head formation. We're trading just below the moving averages here. This same number, this 40-period moving average on the daily is somewhat equal to the level on the 10-week moving average. They're very similar. If you think about it, 40 days is very similar. 10 weeks, probably 50 days is a better number, but they seem to map out really good. You'll see here the 16,621. If I go over to weekly and look at the 10-week, the 10-week is right now 15,580. So it's a little bit below, but this, when it jumps up next week, it's jumping up about, looks like 1,100. So it'll be 16,680. So it's going to be right in that range where that 10-week is as soon as we finish this week and go into next. So as far as Bitcoin goes, sideways range, probably R2 could print as high as 20,593 and somewhere between the 17,980. Extreme would be 16,676. If you saw that number, you want to buy it. You want to buy Bitcoin. If you see 16,006, you definitely want to be a buyer down there, somewhere between that S3, STX. And like I said, these numbers are going to stay reasonably similar next week. I don't see, because of volatility, they're it could contract just a little bit, so that S3 numbers probably could be closer to the extreme. Yeah, ES is still down 4 handles, so they're trying to rally it back here. Yep, definitely. Yeah, we got composite up 56 handles right now. That's pretty crazy. Yeah, like I said, I don't care if this S&P closes down 1 tick on the day. That's going to confirm the outside reversal. For me, you'd be hanging in to the next day with a short, especially if you got it off in the 37 handle. Okay, so let's go through some of these stocks then. Let's start digging through this stuff. See what we can get. I'm trying to get this positioned so I can keep this up on the screen and we can see the market grid on all these. There we go. All right, so we will start off with just the typical. I get these two out of the way. We'll get Apple. Now this is actually a classic dragon head with the moving averages in there. 117.71 is the 10 period moving average. This is weekly chart. This is definitely the support levels, but we're also seeing the volatility start to contract pretty substantially. And did we get an RXT sell last week? Let me look here. Now we just missed an RXT sell on Friday, so that underlying 10 period moving average got a PPM of 0.86. That's pretty strong. If we go over to the daily, let's see what that pattern looks like. Yeah, so we're just continuing in this uptrend. We got PPM 1 at 0.58, 0.28. So PPM 1 and 2, which is the 10 and 21 period moving averages, are in trend mode. So you're going to stay above those numbers. Your buy zones are going to be this 21.96 to 19. We had a 20.15 low, so that would have been information you could have used a couple hours ago. But that is the buy range, and that simple 10 and 21 period moving averages should be a good guideline for the next couple of days. Upper end of this pattern is 124, 125 looks like to be a bit of resistance there, but we do have some pretty good momentum there. And for the markets to be able to move higher, they're going to need Apple to go along. Let's do the world famous Tesla. I did see an interesting stat the other day, and that stat was that Tesla has raised $12 billion this year in new equity. And that represents all of the cash that 88% of every company in the S&P 500 has on the books. So obviously, folks are believing. We know we're coming into the S&P here real soon. So all of this stuff is happening. And, we're seeing this thing drifting. You know what? I did it again, didn't I? This is not Tesla. I don't know how I get this HB. What? Let's try this again. So going way back to this 831.92 area where we got that sell signal, we went sideways. Now we are setting up. Yeah, I'm sorry about that. I saw Tesla somehow that I inverted the symbol. It wasn't Tesla. So we have the 10-day moving average right now at 601, and then we're trading right along that line. PPM 1 is 0.83, PPM 2 plus 1.94. So those of you are new to the channel or just watching for the first time, these numbers are, the PPM stands for price pressure momentum, and they measure the angle of attack of the trends within the moving averages and tell what probabilities there are for the market to remain above those moving averages. So PPM 1 is at a 0.83. There is a 70% probability for the market to remain above this average. Well, we traded below it this morning, and it's popped right back above it here on Tesla. And so, but as we look at the market grid here, we're still looking at a sideways range. The upper end of the market grid is 641 to 652. This is on a daily. So if we go over and take a look at the weekly, we'll get a bit different picture. You'll see the underlying moving averages. The PPM1 is plus 4.52, PPM2 3.76, and PPM3 4.15. So we're looking at the probabilities of continuing higher are strong, but we're getting that squaring up this big volatility range again. It's similar, and I've talked a lot about this, it's similar to what happens in Bollinger Bands when they get the big bubble that grows when volatility spikes. Yeah, that's funny. It looks like a boa ate a, it really does, huh? Ate a deer. But yeah, when we get these big volatility spikes, this is another one similar to what we got here. We're likely to see this range set up and start to work this range on both ends of the range. Probably R2, the ranges to watch for on this thing. What did we print up to here? We got up to R3 667, so pretty close. We're right between R2, R3. Same thing, S2, S3, those are going to be your ranges you're going to watch for going forward. And as we come into January, that's going to continue to be the number. I mean, it's amazing. They just keep adding shares onto this thing, and it goes up. People love Tesla. I'm still not convinced the cars are that good of a deal, but, you know, as I've told you folks before, it depends on where you live, whether you're really driving an electric car or if you're driving a gas or coal-driven car, depending on where you're getting your electricity from. One of the most green areas in the United States of America is Phoenix, Arizona. You got great sun, but you got nuclear power here and hydro. Hoover Dam, Roosevelt Dam, and nuclear, and all the Teslas. And there's a lot of Teslas in Scottsdale, Arizona. All right, so let's dig into some of these other stocks that are coming up. Let's do the airlines. So here we are looking at weekly. American Airlines continues to move up. PPMs are just screaming here. And I would suspect that we are going to there's going to be a convergence here going back up to where this thing broke down from, going back on February. That was a $20, $30 high. So we're going to move probably, this is something you can do. This is going to seem I just want to look at something here between the current price and here. I think these are going to be little numbers, but I'll read them to you in case they're too small to see. I would suspect we'll see on this stock somewhere between a minimum of 22 to about 25.50 on this stock will be the next place, but it depends on this volatility, but the PPMs are just screaming. We got a plus 3.83. This is our weekly graph. And there's no reason to look at the dailies. This thing is on this tear. We've got over the 10, 21 week moving averages. Everything's in play. Um, there's some interesting things going on. I know I see some of our European folks on here that I know names and where you folks are, and I suspect that it may be, if you want to travel internationally or whatever, you may want to, you're probably going to have a vaccine. And I wish I could, I need to call a friend of mine, and he knows a lot about these vaccines and what they're doing, and he's telling me the Pfizer vaccine, you don't want that shit in your body. You don't want that. And I've seen a bunch of reports, I guess the reactions to the shot, and then the second one is just brutal. Yeah, and I see Floyd's Garage, Kathy Wood said a couple years they would be cheaper than gas-powered. We'll see when all the new taxation comes on electricity and everything. It's going to get really interesting. They'll start taxing electricity because of cars just like they do gasoline. So good old government regulation and all that stuff. And Kathy may be right. Right now, my point is not that they'll be cheaper. It's just that their electricity is not what they're running on. There's sometimes you're running on coal or natural gas, depending on what your power is. Yeah, I agree, Frugaholic, no vaccine for me. I mean, they're going to have, yeah. I have people in my life, and including me, that they're talking about the military distributing this, so it's going to get scary. Yeah, that's interesting, Junior. Yeah, I've heard the same thing. Yeah, I'm just looking at watching some of the comments come here. Yeah, I hear you, Garden Chick, on that. That's Kathy's theory on taxes and innovation. Not sure taxes have that effect. We're going to not be operating in taxes. We're going to be doing MMT, which is going to be modern monetary theory, which is going to be borrowing money rather than taxing. So they'll run up massive amount of debts because there's not enough. If you took all the money from all of us that we make, you couldn't pay for what they're about to propose anyway. The Green New Deal, all that stuff is the sticker on that is way too big. So that means that you're going to have to just borrow the money. And yeah, so yeah, it's gonna get interesting. So keep going through some stocks here. We got about a half hour to go. Market's only down 155 now, so they're down 118. So they're going to take them positive again. Down $1, down 96. So they're trying to push this thing back up on the session. Yeah. Yeah, this next 30 minutes will be interesting. So let's take a look at, let's do UAL. And then I'll start moving real quick through a bunch of symbols. Same thing with UAL as in American Airlines. These are similar, obviously almost identical companies in a lot of ways. I won't fly on American because their planes are so old. They've actually updated them a little bit in the last few years. And I'm not sure, I don't know about you folks, but I'm not sure I want to fly on a 737 MAX. I don't have the confidence. I'm telling you, I'm about to make a big road trip. So we're not flying. So anyway, okay. Let's go ahead and do Amazon. I'm going to kick through a whole bunch of them. Amazon's in that, I think Borg actually called it good. It looks like a python swallowed a deer antler sticking out. But this is interesting because Amazon's going into what I call a volatility contraction after all of this. I almost call it like a caterpillar type formation, and then we get into a sideways, very narrow range on a relative basis on what it was, and that usually is a precursor to lower prices, not higher prices. So this I'll be watching pretty close. We can talk about it next week when that comes up. Let's keep. I'm going to roll through some symbols now. CRM be next. We're just going to do weeklies. CRM below is 21 period moving average, up a bit today. Probably heading to the 40, down at 203. Doesn't look, PPM's all negative. No, not all. PPM 1 negative, PPM 2 is positive, but it's rolled over. It's through its first, second derivative. So everything looks like this thing wants to drift down toward that 40 period moving average. And you could probably look at the market grid there from that standpoint. Let me just put that up. And you can look toward maybe an S2, S3, 213, 207, 201 would put us to that moving average. Okay. Let's do Next Gen Energy. I guess this must be our uranium. So we've got back-to-back. We've seen this happen lately, and some of these blow-up stocks where we get, and we even saw it on the week of the election on S&P. We got back-to-back SPX sell signals that did not work. The market was going up, and I talked about, I think, some last week on the live stream, that it was interesting that literally that Sunday night before the election, that we gapped higher on Monday, Tuesday, Wednesday, Thursday, Friday, and whoever the buyers were, they were fearless. They had no fear about anything. It was as if they knew something. I'm not sure, so I'm not going to go into conspiracy theory, but that's something there. So here we're getting on this stock, we're blowing through this thing again. It is vertical, but PPMs are off. This is a weekly graph. So I wouldn't be surprised based on this that we fall back into this grid mode. But the grid, if we stay here on into Friday, this grid will turn up. So all the grid STXL says, it's not necessarily a top. I keep trying to educate everybody on this. What it tells you, 1 to 2 bars sideways, and typically it will go to S2, S3 is the extreme of the next. So you have to kind of have the grid. So we don't know what the grid is until Monday on this one. But right now that would be 209, which would be a pretty big sell. But this is going to move up, so all these numbers are going to slide. So typically in this type of pattern, what's R1, so 225 would be probably the move on back on this one. Could go a little deeper. So let's. I'm going to keep rolling through these as fast as I can here. This is one of my good friend's favorite stock. But yeah, so we got an RXT sell this QCOM weekly. Like I said, we're going to stick with weekly. Here's RXT. Couple of days, a bar sideways, 3, another RXT. So we're into RXT sell sideways, but it's stair-stepping higher. PPM's just through the roof here, and everything looks wonderful on this one for sure. CRM looks similar. Stock we just looked at a minute ago. I'm trying to remember which one it was now. But looks like this wants to go to it, work toward the 40 period moving average. Or did I already do that? That's why it looks familiar. I did do it. That's why. Sorry about that. Didn't check that one off. So Pershing Square, weekly, not a lot of data here. To some of these new stocks, it's hard to make any type of analysis with. We did get RXT sell right over here on the 30th. Here's our 2-day sideways, but we're in this pattern. This 10-day moving average is coming up through here. This is one of these crazy gapping stocks, but we're going to be locked into the caterpillar mode where we're going sideways in the market grid. So big, broad trading range. The 10-period moving average is up at 0.45. This market's going to want to get back above that number. Right now, that's 25.67, so not a lot, but it's going to want to work above that. Just keep an eye on the S&P here, down 146. So kind of struggling. 20 minutes to go. We'll see what we get coming into the close here. I've actually got a trade. I don't want to hold overnight if we close higher in the session. So. Okay, so let's keep moving along. There's TWLO. We're up 6.5%. We're above the STX today for the daily. Let's go to weekly, see what that tells us. Weekly's in that, basically in that big consolidation range. 10-week moving average is driving at 305. 43 is a 10-week moving average. Look at the low of the day, 305.61. So perfect bounce off of that thing, and now we're trading 33. So that was your trade for today. This 10-week moving average will continue to be what I call the demand line, and we'll continue to move this. The only thing that's happening here is we're seeing PPM starting to bleed off a little bit, and PPM 1, but PPM 2 and 3 are still acceleration. So this stock is still got some upside. Looks like the grid, if we stay in this configuration and into tomorrow, then we'll see this thing actually, the grid will turn up. So you probably see higher prices next week. Let me put up some Fibonacci's on this, just see if there's any pattern being recognized here. Yeah, so this will be helpful for you. These longer term, this has been a valid projection for a while, 436 target on this stock on an intermediate basis. So that's a big number. So here's the Dragon Head on Peloton. And that just sets up a big consolidation, probably going to trade between the 10 and 21 week moving averages. Those numbers are 116. We're trading just above it right now. You still have a positive, but what we can see of the PPMs right now is you can see they're fading off, and they're both below their first second derivative. So we're going to stay within the grid, sideways, this broad range, the extreme ranges are 127.39 to 101. I suspect that's going to continue on as we go forward on this stock. Well, I don't know where you folks find these stocks. This is we need to find them. You guys need to let me know these stocks when you like them, when we're down in these basing areas, not when they've already surged. Maybe you already own them. But yeah, if you're seeing stocks that look like really good, you like them, then maybe we can find some really good ones. Right now, this is going to enter into that same mode where we get this big high level, big consolidation range. This thing's going to be all over the board. Good luck trading this one. Maybe if you can trade off R2 120, if you see sell at 124, buy at 99, maybe at 93 if you see it. That's about all you're going to be able to do and trade in and out of this thing. This explosion, PPMs are, yeah, this is a really tough read from that standpoint of trying to figure out what to do, but that's going to be what it sets up here. Yeah, so we're getting the RXT sell on DGII, and this has been pretty good. We also are hitting the, I'll have to bring this down on this chart here, the target range. 1933 was the high target 1, so we've met that, and we have an RXT sell. The 10-period moving average, that demand line has been holding for the last 5 or 6 weeks. Anytime you get close to that, it was a buy. And even this week, since we're looking at weekly, the low was 1704, 10 weeks 1680. So that's about, like I said, you get close. And now we're above RXT, above 1893. So PPMs are accelerating, crossing. This is a really strong stock. Looks like there's more in it. We'll probably get an RXT sell, so we'll probably get some consolidation for a week or two. But you have to understand that what's going on here is actually a lot to do with year end. So a lot of these stocks are going to go flat to sideways, and then ultimately, you know, when we come into the first of the year, that's when new trends, new ideas are going to be able to flow back out again. But it does look like an awful lot of symbols, especially when we go out to that secular level, are going to be in a really choppy range. Not that there's not going to be some great ideas out there as far as that stuff goes. We got 15 minutes to go. CASA systems, weekly. PPMs look incredible. Hopefully you own this thing down in this base down here at 4. And yeah, as far as it's already satisfied the Fibonacci projections of going up to the 744 level. So we've traded up to that level, 797 high. So we've exceeded this red dots here on the screen. So we're pretty much satisfied this particular pattern, but the momentum underneath it is pretty good. So you're going to look at the values down 603, like a buck lower, 580 would be your premium buy points if you can see that. And then you just have to continue to make sure these moving averages have enough momentum. They're going to continue to rise underneath this pattern. So you're looking at about 40 cents per week on the 10-week moving average. So in 3 weeks, 4 weeks, you'll be at $6. So that's going to be a pretty safe buy if you do happen to see that one there. Yeah, so Who is this? Mike Howard. Yeah, so this was AVB looking for that basing. We got some plus numbers here. We're trading right below the 200-week moving average, so we traded up to that. So this has got some more work to do, even though the PPMs are all, or two of them are in trend mode. PPM 3 is still down, so we're trying to trade back toward that 40-period moving average, 156, 157. So we're probably looking at that range right there as far as that goes. That'll be that'll probably be a buy point, but you're going to have several weeks of consolidation yet before this thing's going to be ready to roll. And there's no Fibonacci's out of this pattern, but if it sets up right and it holds some these moving averages, you could see where you're going to see a 220 plus target on the upside. Yeah, so I don't know what these guys do, Avalon Bay Communities, but yeah. Yeah, so I brought up the weekly VIX. Let's go to daily. I've seen this requested several times, so let's do that. Pretty appropriate time, 12 minutes to go. S&P is now positive, up 0.63. And this is going to be tricky coming into the close. We'll get focused on the level 2 on the S&P here in a few minutes. Let's do a couple other symbols I wrote down. So here is, oh, I did Pershing Square. I did this earlier. So I'm just looking through some symbols here. Let's see what you folks are throwing at me right now. KRMD breaking out of this. This is daily. Let me get over to weekly. Yeah, interesting. What are these guys? Repo Medical Systems. PPMs are still pretty negative on the longer term, so there's a lot of resistance, 702. Probably, I'm going to guess 2 or 3 weeks before this thing's set. So first of the year, this may be set up in a pretty good pattern. If you happen to just love it at $3, you did well. And as far as the setup goes here, we should move to at least the 21 period moving average, 702 maybe. But there's not like big upside on this stock at the moment. Nothing there. Time we got 51. Yeah, we're up 167 on the S&P. Very disappointing. I was really hoping we'd get a confirmation of the reversal. And it looks like they're buying them into the close. They're trying to right now, which is disappointing to me. We'll see. We still have a few minutes to go. Now we're almost up $2. So yeah, they're bidding them up. So yeah, so here's Shopify. Similar patterns weekly. We're in that creepy crawler mode. There is some longer term objectives like 1600, Don't know if these are going to be valid. I've seen these before where they'll pop up. You'll see one in the middle of the screen here where they pop up. And we do reach those numbers, but they're quite a ways down the road. So there could be some longer term objectives here. PPMs are trying to turn up. Nothing really exciting in the pattern, but we do have a positive uptrend. PPM 1, 0.37, 2, 0.66, and 1.77. So definitely a nice uptrend. The 10-period moving average is what you're going to want to pay attention to at 1,022. This week we printed 1,007, so we printed just below it. And the 21's 1,002. So that's your support range between 22 and 2. Basically, it's grinding up, but it's, you know, it's not going to give you any excitement like our friends at Tesla and some of these big mover stocks have been. Yeah, A-Town, you're right. I talked about that. I don't know if you're referencing my comments about the Airbnb, but it is absolutely ridiculous. For sure. There's probably other words you could use. Yeah, it's going to get interesting here in these last few minutes. I'm doing one more stock, and then we're going to the level 2. I got CRISP up here, CRISPR Therapeutics. Got RXT sell last week, but we're still trading higher. So if it closes lower in a week, that lower from last week, let me make that clear, that would be a close below 147. If we did close below that tomorrow, then you'd probably see a couple of weeks sideways, but I think you will anyway. You'll stay within the grid. The Fibonacci projection prices gave us range expectation here of the let's see here, 149, which we met that, and then high target 2 is 177. I'd be surprised, but if we stay above, this market stays tomorrow around these levels, the market grid's going to turn up. So it's going to keep pointing potentially toward that 177 number. So PPMs, everything this is a very strong stock, to say the least. All right, so let's go over after that. Let's take a look at some of these numbers here. So, yeah, so we're negative again. Interesting, by a couple pennies. We've got 5 minutes to go. It's classic. One of my long time ago, one of my old clients used to say, how do you pick these numbers that it's right on the edge? Here we are down $1. You know, he used to say we'd close like 2 cents under a number or above a number, and that happens to me a lot. So now we're down $1.33. We got about 4.5 minutes to go. So we'll see what kind of selling going. So just yeah, just yeah, so we're down $2 now, getting a little bit of selling. They want us well, Jake, I'm looking at a lot of stuff, brother. I'll look at it after this. This line just moves my scrolling, so I can't see everybody's. And you have direct access to me, so. It's not about that. I'm glancing over that. I'm actually working. So I know you're special. Just hang in there. There's 500 people talking on this thing. So, yeah, I just glance over and see what I see. Don't even see your name on the page right now. So, anyway, yeah, we're just basically coming in flat, and 246 now, so maybe a couple cells coming in, minute and a half to go. So we'll continue to watch this and see how it all plays out. Down 184. Just about a minute to go. $118. Boy, this is okay. Yeah, this is going to get interesting here. Trading 69 on the futures. Looks like they're going to try to push them down in this last minute. Down 327 cash, 341. We're in the final minute. 413 down on the cash. Looks like it's like Hold'em. So it looks like this will be a confirmation of the outside reversal. So I'll set you up for what's likely to happen tomorrow, or what has to happen tomorrow. There's the bell. That's the end of this. That's it. So down 477 cash, perfect. And so what this sets up is the following. So just real quick, I don't know why is no one commenting right now because my time is not moving. Usually you guys aren't so quiet. So Jake, if you're still around, give me the stock. Anyway, yeah, so we got a nice sell off into that. So here's what has to happen. So this is day 2. There's the criteria for tomorrow is this, is it cannot make a new high from today's value. So let's use the cash. Let's set up this trade. So if you got short in the last 2 days and you caught this reversal from yesterday and you held into tomorrow, this is the criteria for your stop losses and for a continuation of the trade into next week, into Monday, what have you. Okay? So we go over to the SPX. We go to daily. So the high today, the high was 3678.49. So the criteria is we cannot make a new high from today's high. So you have a stop loss on a short position above today's high, and it has to render a new low from today. So 2 things. Cannot go above this 3678.50, and it has to go below today's low, which was 36.45. So that's 23 handles lower. So we have to be 23 handles lower. We cannot go above today's high at 78.49, and we can close anywhere in between there, and it's fine. And the same criteria will cover into on for Monday from a cash trade viewpoint, is that you won't be able to take out the previous day's high, and you have to make a new low. And then the fourth day after this pattern, if it makes a new low, you take profits on a new low. But watch that Apple video that I told you about. It's in the uploads. I think how to sell Apple, all of these details are in there. So bear with me just 1 second, okay? Okay, folks. I guess we're gonna call it quits here, and just kind of winding things down. I did see a couple people. I'm going to do 3 stocks, and then we're going to close it down. Okay. NEO keeps coming up for hours. I didn't mean to put it here. Let me get over to the right chart. So NEO is that same pattern we've been talking about. This on a daily. It's just kind of drifting. It's riding above its 40-day moving average, which is going to be the key. But here's the big chart you want to look at, is the weekly. This is that big volatility spike. So the 10-week moving average is going to be the value you want to watch really close, 38.54. It is rising sharply. Let me just get the number. About $2 per week. So that'll be 40. So anything close to 40, you'll be able to buy as we come in to next week. We got really screaming PPMs on that as far as that goes. I covered did I? PLTR. Yeah, this thing is pretty insane. it's such a new stock, there's not a lot of data to look at it. The only thing we can look at on Palantir, I guess how you say it. This has got the dragon formation, everything. We can't even calculate the ppms down here. There's not enough data yet. So this is difficult one to cover, other than probably looking at the lower end at the 2243 level, and you're going to have support between 26, 22. I really can't help you much on this one. This is a tough one. Just not enough data, not enough history to really make any solid calls other than looking at some bars and guessing. So we really don't get any of that. Yeah, I think it is time for a burger. Yeah, it was funny. Yeah, so we're getting a RXT sell daily. So actually what you're seeing on the screen here, by the way, on CrowdStrike, this was the values for today. This is already tomorrow's calculation for the market grid. So these are expectation numbers tomorrow with a RXT sell. Maybe 176 S1, S2, 176.80, 173. But everything's accelerating in this one. So it's definitely got a strong pattern. No Fibonacci projections, nothing there. I don't know if there's anything on a weekly. Yeah, so we're on a weekly basis, we're trading up toward the extremes as well. 181.80 is the higher end of the range. Yeah, so anyway, let's see if there's anything else here. Nothing really. All right, folks, I think I'm going to call it quits, and I appreciate everybody for showing up and watching the show. It'll get all rebroadcast. We'll get it all marked up so we can have the timelines and everything on there so you can see what's going on. Takes a little bit later. Yeah, no Whoppers, man. In-N-Out burger, protein style, triple. I can't eat the bread, man. I'm a keto guy. Yeah, but that's some good for $5. That's some good comfort food. That's funny. All right, folks. Thanks for watching. Appreciate it. What's up, man? It's impossible to see this timeline. You don't know what's going on here. I saw you show up and this thing just moves. I can't. And I'm working on screens. I can't. If I didn't see a symbol, it'd question me. You might have put it there, but I can't see it. I'm not. Yeah, I can't help you, man. There's 1,000 people on this line. I don't know what to tell you. Jake, you're not on my mind at that level, man. I'm running businesses. I'm in the middle of a lawsuit. I got so much shit fucking going on in my life. And, send me a text like you did next time. You've got direct contact with me. I'm glad to sit there and talk you through the fucking thing. I mean, of course I do. I fucking hate you. You know better. Come on, man.